Hello everyone. This is Aim Ahmed from KIDS Consulting, and today we will be discussing the consent order that was issued by the Treasury Office of the Controller of the Currency, the OCC, to Citigroup that back in October 2020. The federal banking regulators fined Citigroup Inc. $400 million and ordered one of the largest banking in the US to fix its management system, citing a significant ongoing deficiencies. So in this video, we will go through the details of this consent order just to make sure we bring some understanding to this consent order, and also we'll draw some we'll discuss some implication, and we'll draw some conclusions around this, as well as we will discuss what will probably might happen, how really can a major bank like that at least take some steps to fix it. The focus here will be the amount is significant, and then the other thing is the comment itself, which is a significant ongoing deficiencies. It reflects that ongoing mean that it has been going back for several years. And then among the points that a consent order touches on, it was the failure to establish effective frontline units and independent risk management, which here we talk about risk management and internal control, and internal audit, which part of it, the control itself they have around the risk management. Also, one of the point is failure to establish an effective risk governance framework, and that's very, very critical. Why? What does this mean? Meaning that it has to be some kind of document, a formal written risk governance framework that designed by independent risk management, and it has to be approved by the board of directors. And then that framework annually will be reviewed and updated as the bank progress in their operation. So it's kind of in progress document, if you would say. But that framework again wasn't really. It seems like it has a lot of work need to be done in that framework. That's what they're looking for. They're looking for that written risk governance framework. And what really category that governance or risk governance framework will touch? Actually, will touch in the credit risk, the interest rate risk, the liquidity risk, the price risk, the operational risk, the compliance risk, the strategic risk or risk. That's why the magnitude of this consent order it would be felt throughout the organization, because every unit and every function within that organization, it will feel that. It's going to be some token, I'm sure about this all the time. It's going to be on the table, talking about from low level to the high level. Again, because of the magnitude, and it touches more functions within the organization. That framework also, as no surprise, will be probably overviewed and reviewed by the chief executive officer as well as the board of directors. And also, in order to get that fixed, it has to be started. They have to have a starting point here, and the starting point, I believe, it would be in the chief of internal audit and chief of audit and chief of risk. those are, I believe, the two individuals the story has to start from them, and they start building that kind of framework and the risk framework around the whole organization in order for them to be able to fix the issue that was mentioned in this consent order. Also, the consent order talks about procedures and process and policy. So doesn't matter now if you have like a couple of people, they understand everything in their head, they know that the process, they want to see it, written process, probably chart flow process, desktop documentation, desktop procedures, and so on, because all that has to be translated into within that risk framework or risk governance framework that the consent order mentioned in detail. Also, one of the things is going to be the human capital. How skilled people are you hiring? What's the training plan you have for them? How you develop those talented? And interesting enough that one of the things that also that consent order talks about, it was the compensation and performance management. So as I said, it touches in every aspect within that. They want to make sure you hire the right people. They want to make sure you train the right people. It's going to be some challenging here because as we know, if you're really relying in most of your project in consulting and short-term individuals, that has to probably be looked at and it change at least for the time being, only in the short term until you get those area that taken good care of and will and you establish that understanding and establish the confidence in your progress and in your plan. Also, one of the things that is really interesting in this consent order, it talks about the data quality. And as we know, as a global bank, sometimes you see that challenge because you're dealing with multiple countries, multiple continents, and also the system are different. Sometimes they are not talking the same language. So that's one of the things that that consent order talks about, that the data quality, not what they expecting. So another area that is going to be a challenging area, I believe, to accommodate, because you will need to fix the source, you will need to make sure the numbers flow clearly in your system, and then the consolidation and it done in a very optimal way, and also the reconciliation. And then the big part of it is how much of human interference in this, how much of you massaging your data you're doing. Again, if you look at the Fed, if you look at the Treasury office, they don't want to see that. They want to see that your number is having a little of massaging there. They can trust in these data quality. So again, some work need to be done on that. So that's basically the main point on that consent order. As we see, what the implication of that, I think is going to be a story for some time. At least you will hear it during the core report. If you have, if you release your earnings or something, they have to speak about that all the time. Again, when you have a fine like 400 million, you're expecting to spend probably 3-4 times the amount in order to fix the issue. So you're talking about probably 1.2, 1.5, 1.6 billion dollars to be spent. That's is going to be challenging during that time with COVID. We know that there is a vaccine coming out, but again, it's very slow for most of the businesses, and especially if you talk about big banks, what's their operation stands for or relying on. Are they relying on retail? Are they hybrid between retail and commercial, or they really rely on the high net worth companies and individuals and businesses? But in this case, again, you gotta make yourself, establish yourself very well. If you have these issues, going through some fixing system, and with the and getting fined from the Fed or from the OCC or from any regulators, then that will be concerning, and that will be a red flag, because you gotta pick and choose. I mean, who you go with to conduct business, and how much money you're going to spend in this in order to get it fixed, and looking at earnings and how much this is going to be impact your earnings. So it's going to be definitely it's not going to be easy, and it's going to be challenging time. But again, I'm pretty sure, by making sure that talking about it, hiring the right people, and spending money and invest and be patient, I think Citigroup will manage to come out of that, and hopefully that will be behind the story, part of the history, and that's going to be in their back burner. But again, for the time being, it's a challenging time for them, and definitely it's going to be more work need to be done on this. That's all I have for this video. If you have any comments or question, please send us an email or comments. We'll be happy to reply to that. In the meantime, please stay safe, and we'll see you in the next video. Have a good one.